Hey, what's going on, you guys? I'd like to welcome you back to my channel. And in this video, we're going to go over the basics of market structure. Now, the easiest way to explain this is when thinking about market structure, it can only move three ways. So the first form, you have an up structure. Then you have a consolidated range where the market makes equal highs and equal lows. And then you have a down structure. Okay. So let's break this down. In an up structure, for it to be considered or validated as an up structure or an uptrend, it must produce higher highs and higher lows. Okay, so let's look at this. In this uptrend, this first point here that we kind of drew on this example, this will be considered as our low. This is our initial low. Okay, our next point is a high, because this is the first high from this low to this high. Now from the low to the high, this is considered as a leg of structure. Okay, this is considered as a leg. So from there, our next point is considered as a higher low, because this point here is higher than the previous initial low. Okay, from there we have a higher high, and then the next point will be a higher low. So you can kind of look at it to say the highs will be on the top and the lows will be on the bottom. Okay, so now from here we have another higher high and we have a higher low. So now when the market starts to move in a consolidated range or starts to trend sideways, this is, let's actually draw a point here. Let's change the color of this to black, and let's draw another one here. So like I said, when the market is moving in a consolidated range or sideways, it starts to make equal highs and equal lows. So from there, we want to look at these as previous highs. That's about the easiest way I can explain it. That way it don't actually confuse you and you don't necessarily fake yourself out. So all of these points, these equal highs here, are considered as previous highs. On the bottom, we can look at those as previous lows. Okay, because they're all the same, and the last leg of that structure has not been broken. So for example, this is the last higher low within our uptrend. So even though we've moved to a consolidated range, we're still in an uptrend until the previous higher low, or this previous low, has been broken. Now when we get to this point here, we get a break of structure. Okay, so this point here, when the previous low has been broken, this is called a break of structure. And this is where we start moving in a downtrend. So let's look at this. In a consolidated range, we get equal highs and equal lows. Okay, so that's for our consolidated range. Now let's look at the other one. For a downtrend, we start getting lower highs and lower lows. Okay, so we can look at this like so. So now we've gotten a break of structure and we've come back for a pullback or a retest. When it comes back, this is considered as a pullback or a retest. And each one of these legs of structure here, when it pulls back to this higher low or this higher low here, these are considered as pullbacks or retracements. Okay, so in this pullback or retracement here, this here produces a lower high. This point here is a lower low because it broke the previous low. Okay, so I hope I didn't lose you on that. I hope I didn't lose you guys on that. So once we break structure, we get a lower low because it broke the previous low. And then from the pullback or retracement, we get a lower high. So from here, we start producing lower highs and lower lows. So for example, once this lower high, I'm sorry, this is a lower low here, lower low. So once price breaks the previous low, lower low, that gives us another lower low. The pullback or retracement is considered as a lower high, and this down here is considered as our last lower low. Okay, so now let's look at this. Let's say if the market decided to pull back and break our last lower high. So in this instance, this here is considered as our break of structure. So we've broken the downtrend structure and now we're moving to an up structure. Let's change the color on this back to black and sorry, red. Okay. Now, price will give us a pullback or retracement. And from there, producing a high. And then from here, it'll go up. So we can kind of look at this as a higher low and a higher high. Okay, so this point here is considered as a break of structure. Because, let's remove this. Okay, this is considered as a break of structure because it's broken the downtrend structure, which was our last lower high, and we've broken, and we've got a pullback or retracement to a higher low, and then it broke out. Okay, so let's recap on this, you guys. So in an uptrend, we have higher highs and higher lows. When we move to a consolidated range, even though it's moved to a consolidated range, this does not mean that the up structure has been broken, because it's still producing previous highs and previous lows. Until the last higher high is broken, then that will be considered as that leg of structure continuing to go up. However, since we've broken our previous low, now we've moved to a downtrend structure. And whenever you get the last lower high from that last previous leg to be broken, that's when you get a break of structure and you start to move back to an uptrend. Okay, so now A consolidated range, it can happen in a down structure as well. So if a down structure was continuing down like so, it can actually move in a consolidated range as well, producing equal highs and equal lows. So it don't necessarily have to be in an uptrend. It can happen on a downtrend as well. So like I said, uptrend, higher highs, higher lows, consolidated range, equal highs and equal lows, downtrend, lower highs and lower lows. You get a break of structure once the previous low or the previous high was broken. Hey, you guys, I hope this was informative for you. I'd like to thank y'all for viewing. All right, I'll see y'all on the next video.
Yeah.